Hello guys, glad to have you on board again today. We're going to make a real quick one as I don't have that much time available for you today. So I'm going to go straight to the essential. We're going to review yesterday's session on the US, which is absolutely crazy. But is it really bullish, bearish? We're going to talk about that in a technical perspective. The problem is the market isn't really trading technicals right now. It's more like a range. And in ranges, it's hard to forecast what the fucking market is about to do. Yesterday is really showing us that the bear trend isn't ready to trigger yet, that we might extend the ranges in the next following days, just waiting for further informations. Just be really straightforward in here. The market's just waiting for just one fucking single thing, waiting for Apple's release, and that's all it is. Apple earnings, and it's abnormal. It's really dangerous because the entire market cap and all indices and the future of all equities is just relating about just what the US indices are doing. Which means China is looking for how the US will react. Euro area is also looking at how the US area is reacting. So everybody's looking at the US, and the US are just looking at Apple. So it's really dangerous. Like the entire market is relating to how Apple is going to trade in the next following days and months. Highest level of danger, highest level of stupidity, as usual. It really reminds me when I studied the 2000s crazy stock bubble, where back then just a few names were making the market, and basically every other assets were just trying to figure out what to do, and nobody cared about those assets. It was just smart money was making rotations, switching from value stock to switching from growth stock to value stock, and the market is holding because of just a few growth stock holding the value, and then obviously those growth stock failed, like everybody not thinking they want. I mean, too big to fail. You know the problem. It's about Apple right now. It's too big to fail. They have too much cash available to just drop. This is what it is. So this is how they go. Basically ask yourself the right question. Is this rational? No, it isn't. Obviously, it isn't. It's nothing close to rational moves. So this is a psychological pattern. And how do you trade those psychological patterns? You have a look at how the price reacts, who's trading those prices, and how you can take advantage of it. We're going to review this once and for all, and we're going to talk about the crazy pattern happening right now in Apple. Do you want to be part of it? What are the risks? What are the rewards? And which side of the coin do you want to be? Okay, which are the risks of both sides? So we're going to take it in a bullish perspective, in a bearish perspective. Some say I have a strong bias, a strong bearish bias on Apple. No, it's just that to me, the biggest gain for the lowest risks are to the downside. And I'm just waiting for this to come. It might not be today, might not be tomorrow, might be 2 months from now, might be the next quarter. I don't know. I'm going to show you some timings I'll be trading on. Obviously, yesterday was a timing, and the market just proven me wrong with the most awful way to do it, by just basically wrong footing, giving a short signal and just taking it all on the opposite side on the entire day, not giving me a single chance to get out of this, so no pullbacks. It's just basically you get in, you got trapped, and the market just fucks you up in a straight line without reason. It's not technical. Once again, psychological pattern at the play. It's just Apple isn't trading technicals. I thought we would eventually do it because we had some kind of interesting timing to trade yesterday. I'm going to review that trade, and that's basically all we're going to do today. So as I said, I think US indices scenario, it hasn't changed a bit. We're still, and I think, and I stand on this in a daily perspective, we're oscillating near the 200-day average. I'm going to add those to the chart so you'll see them a little bit better. So this is 50-day average. We're going to say 200. We're going to switch to 200. Yes. So 200-day average, as usual, I think we're ranging those price before installing prices below. So I still expect some bearish potential in the US equities, no matter what. I expect us to reach out to that previous trend line, which is previous market top, where we trapped a lot of bears. I think we're going to go there again. So we've got that resistance area in here. So that's a support area because we were trapping bears back then. But as you can see, we trapped bears, but anyway, we were going to restore those prices because everything that happens afterwards happens for bad reasons. And bad reasons can last a little longer. The market can be irrational for some time, cannot be irrational forever. But I think it's Buffett who said that. Yeah, the market can remain... no, it's Doe. Let me just check. Okay, real sorry, I messed up totally. And here is Keynes who said that. So yes, the market can remain irrational longer than you can stay liquid. You can remain solvent, yes, to say that. So the thing is that this is obviously it. It's a danger area to trade. I shared a video yesterday on the Nasdaq itself, showing you that parabolic risk taking on the volume, which is very, very dangerous. So I'm not going to say that once again. I just invite you guys to have a look at that video if you want to. So the thing is that we're paraboling inside of risk in terms of risk taking without cover. So it's basically we're swimming naked in a very, very, very dangerous area. The market for now is doing it well. So, sorry, not NDX, it's VXN. So as you can see, volatility is still lower than the previous depths, but the volume is rising. And as you can see, it's really, really dangerous. More volume, less cover, higher prices, suggesting just one thing. Risk appetite is at the maximum. And that's generally where things start to go worse. So you can expect this to eventually happen. So I see that right now too much risk taking suggests that at some point the market will just take that risk and just break supports. So I expect this to come, and obviously if that comes, that it will be ugly, unexpected, and the way it will trigger will basically be unexpected as well, which means something will go wrong. Everybody will be wrong-footed in the same place. Lots of stop loss triggering. Just speculators like me will be able to anticipate this. So I'm just doing my job in here. Remaining bearish is the only option I have because I see the risk. I think the risk is going to show up. And obviously risk means the trend traders will take stop losses. So my targets are their stop losses, and I think their stop losses are there. So I think we're going to go there. Go there first, and probably this as an extended sub move to go fuck up the bears, fuck up the bulls. But obviously in here we'll find a lot of support. So I don't see us going below that price, but in here we clearly have a breakout area, and I think we're going to go there. So still trading the same scenario, just the one thing that has changed is that we're trading that trend line. We want to spend more time trading this. So I just expect the market to make a triangle in here before fucking it up. So we're going to have to make, to extend the time in here to trade. And basically, what gives the difference? Okay, I'm going to be straightforward in here. As I said, everything relates to Apple. Is going to show earnings release on the 1st of November. So you can be saying this, 1st of November in here is Apple's release. Have a look at the Nasdaq and you can be damn sure that we're going to stop 1st of November to build that fucking triangle. Okay? So see it that way, Apple is the only thing that makes the market moves today, which is the most dangerous situation ever, because when it comes to this, the market isn't rational itself, which means big market caps indices. When you take the Nasdaq 100, it's not just about Apple. This is not how it's supposed to be. It's supposed to be market cap out of the biggest tech sectors, shares. Not just Apple. But today the market isn't thinking that way. It's just thinking, okay, Apple is doing, Apple is the big name. Apple is. It's just about Apple, and that's a problem. I see this as a huge problem. And to me, that's a psychological pattern. It drives people attention. It drives stupid traders' attention as well. And it's not going to end well. Question is, right now or not right now? So I'm going to wait for that triangle to eventually build itself. So now and until we've got the Apple's release, I'm going to do nothing. Okay? I'm just going to be straightforward. I'm going to take risks for no reasons. So either we go make the bearish breakdowns, which so far isn't the case, or we just build that triangle. We're going to just basically play the clock. So let the clock ticking until we get the actual earnings release from Apple, and it's going to decide what the entire market will do. It's very dangerous because just one asset is going to make the market itself, which is, and as I said, global markets are looking at what the US markets are doing, and US markets are just looking at what Apple is doing. So it's like the world's clock is ticking on Apple's clock. I mean, fuck it. Apple's just selling fucking phones. It's more than 20% of the US of the phone market, which means they are the fourth or they are the third in terms of market shares in selling phones. But they are the biggest ever market cap ever created. They're selling less than 20% of phones. They're just making huge profit on those phones. That's all they do. They make profit out of big margins. And I rather like be clear in here. This is short-term view, short-term sight. It's not gonna last. This is hype trading. And facing this, I'd like to use one of other big unicorns' names. You know, Jeff Bezos, obviously, but Jeff Bezos is definitely a company I will put some money in there in the next economic cycle, because Jeff Bezos' motive is really something a lot smarter than what we've done, than what they're doing in Apple. Apple, they're just showing short sight. They're surfing, they're basically surfing on the wave as long as the wave is in here. Obviously, the wave will crash on the land at some point, and obviously that's what the end will be. And to me, Apple's futures, just like the future that happened to GE. I mean, GE, as I said, and I've shown you that long ago, so you can have a mindset. This is basically what happened. Apple never, GE never retraced to its previous highs. Never ever. So Apple is probably gonna making its higher price ever, and is never ever gonna go again to those prices, or it's gonna take a few decades to eventually make it. So Apple as a long-term investment, the worst case scenario you should do. It's the worst ever. And first, it's not in the timing. It's a short-term timing to seek for the historical highs, and when we'll have them, it will be the end. That's all it is. Okay. So Apple, big danger. I remind you, it really is a red flag to me. Fuck it. I mean, just look at that. It's even worse than General Electric back then. So the future of Apple is really nasty. Yet everybody think it's gonna last forever. Just fuck it. Look at that. Everything suggests the end is near. Remember what we've said earlier. When a market cap starts to give away dividends, it means it doesn't know what to do with the money. And look at that. Apple distributed dividends. And then they said, okay, now we're going to double the asset repurchase, the share buybacks. So instead of getting dividends, we're going to go more over into short-term risk-taking, and we're going to encourage risk-taking in the short term. So something that is overbought, that is a bubble. We're going to do what? Instead of cooling it down, no. We're going to overheat this thing the more we can. We're going to drive prices as high as we can. What the final outcome will be is that this will basically fucking crash that market. And obviously, the long-term valuations will go crazy low afterwards. We are creating short-term volatility to the upside. This will create short-term volatility to the downside when the time will come. So it's just a matter of time regarding Apple. Just needs to be patient. When this thing will trigger, it's not going to be pretty. You can expect something that will drop unexpectedly, sharply, and this will be a bubble crash. So you can expect the market to lose 40% valuation in a few days, in a few weeks, or a few months. Depends on how violent the brutal bearish volatility will express itself. But to me, the latest monthly support is in here, 127. How, God, can you take this if you're a bullish, and moreover, if you're buying in here? Do you really forecast the price to lose $100? Can you handle this to lose $100 per share? Imagine how many shares those stupid short-term traders are buying right now, because they're thinking about forever profits. They're basically forecasting to get $20 additional on the valuation, taking the risk to lose 100. So yes, obviously that's a stupid choice. Obviously it's going to end bad, and I'll be there to take their losses. That's the thing. So play smart. Think about where you should make gains, where you can make gains with low risk. Buying right now can produce some tiny gains, but with an extended amount of risk to take those gains. As instead, trying at some specific points to try some bearish entries to profit from the stupidity of those buyers is interesting because the risk is minimum. I'm taking very tiny amounts of risk for a pretty fucking huge reward. And this is what I'm teaching you guys to do in here. This is how speculators think. High reward for low risk. That's all we do. I'm speculating. I'm not playing magical. I don't give a shit about what the future will be. All I say is that we have a timing to trade short. We've been making bearish monthly engulfing pattern. It's just we'll see how it lasts. But we've been breaking the lows, and at some point it's not a good sign for Apple. What we have in here is what we call a hammer. Okay, so we still haven't closed that candle. So worst case scenario, we make the bearish engulfing, we will close the month in here or even lower. That's the worst ever. Second option, we make that hammer, which means we close near there. Problem is, generally, that's a range before going bearish. So anyway, to me, Apple shows some very strong weaknesses in here. The question is, we'll see how it goes. And I think we have a timing to go short. If it fails, then I'll wait for the next one to come. Probably going to be the next quarter. Okay, so it's just Apple's earnings. Everybody thinks they're going to be beaten each and every time. I think we're just trying to do as we can. We're concentrating the value into dangerous amounts. And obviously the release, we're breathing in without breathing out. So at some point it gives you two options. Either you suffocate, which means you cannot breathe in forever, or you're just going to explode. So that's how it is. We're waiting for the explosion or suffocation. So just let it go. Play nice. If your opponents are taking your stop losses just the way they did yesterday, I have no regrets. What I've done yesterday is what I should have done. No questions asked. The market wrong-footed me. That happens. They've done it pretty awfully, which means in straight lines. So we're going to review yesterday's session ongoing. Basically what happened. Gapping down on support area on a weak bearish market, trading massive supports. Yes, I thought Apple would just break down. So I got into short entry in here, and problem is the market took profits, which is no problem. Taking profit is nothing like I care about. It wasn't confirmed by momentum. So basically I said, okay, the market is trying to take the profits to hold the gains and to not break the support, but taking profit is not enough to me to stop my trades. So I didn't stop my trades. The market gave another double bearish, so another chance for the bears to take the market over. Failed it, and basically what happened back then, robots took it over and they decided to launch the wrong footing pattern. So in here, robots just took us out and terminated the trends in here by triggering all the stop losses. Here, automatic trading, obviously, no problems. So they just took us wrong foot in that precise moment in here. It's basically 6 p.m. local time from in France. So 6 p.m. is 9, 10, it's noon and a half, I guess it is, in the US time zone. So going there, it's noon, I guess. Yeah, it's noon. So heading to lunch, the guys just left the desk and let the robots take it over and fuck up all the bears in a wrong footing pattern. So obviously, my plan yesterday was to be bearish in here, take a stop loss if we got there, and the market just got there, obviously in a straight line without pullbacks. Never ever gave me a single chance to go out. It's just that's how they do. They wrong foot the bears and then try to break resistances after that. So we'll see if that works out today or not. Next resistance on Apple is clearly identified, and I expect the market to just go chasing this one. It's right here where we've got that resistance, and I expect the market to go test the slightly resistance we got slightly ahead, which is in here, $228 approximately. I expect the market to go searching for that resistance. So for now, I don't care about Apple. Either it goes there and I'll try to trigger a stop loss. And I'll try to take another entry upon signal only. No signals, no trade. And obviously, if the market goes back to that support and breaks that double bullish, that single bullish, okay? So we've got support building in here. If we make a single candle close below that level, I'm full bearish again. That's simple as that, okay? Yesterday, wrong timing. The bulls have wrong-footed the bears, but it looks more like an algorithmic buying entries more than anything else. It just looks like a range, and I think Apple's just going to range again, building its triangle like the Nasdaq will, and then obviously the earnings release will seal the deal. And I have no clue. So basically, I'll wait for this. I'll take bearish entries before the earnings, taking a risk. And if the market buys that again, then I'll just let it go and let the market uptrend for another 2 to 3 weeks. Another 5 to 10 weeks time frame period before trying the short again. Okay, so that's how I play this. If earnings release disappoints, it will be a carnage. Will be chaos out there because everybody thinks this will go up forever. If earnings disappoints, if we gap below the supports, it's end of the game. All the money will just get fucking out in a straight line as well. So chaos trading if we disappoint on the earnings. But if the magic happens once again, I mean, if share buybacks artificially boosts EPS, and if the market takes that as a bullish entry, it's stupid, it's short term, but it can work. And if it works, I'll take another loss and let the market rise for an additional 2 to 3 months period. And after that period, I'll go bearish again upon signal only as usual. And I think the next time is going to be the right one. The more we move higher, the more risk we take. At some point, the parabolic, it's a pyramid scheme. It's a pyramid scheme. When it goes down to this, it always ends badly. It always ends brutally. And I have absolutely no doubt about how this is going to end. What I care is to take that ending the moment the market will switch, because the bear side trading will be far less risky than the bullish trend is. So if you want to take the risk, take it. You might take some reward. I just wish you guys will get out before the nasty part comes up. All right, that set apart. Yesterday was also a bullish entry made on AUDNZD. Right below that support in here. Because the market is rising, and that's what I expected. So the market is bullish. On a daily perspective, we've been giving a double bullish signal. So oscillators crossing in here and got bullish confirmed today. So nice reverse on AUDNZD. I'm back leveraged on that market and rose that number to 4 on 5. So that's another big change today. Other big change is that the market is trying to break down on the euro dollar and chasing for stop losses, basically because the dollar is so strong. You know the deal. The thing is that no matter what happens, Apple will survive forever, and Apple is the biggest US market cap. So the US stamp is put it on Apple. So anything that relates to this is so strong. So the dollar is so strong. Anything like that. So I think that's short-term bullshit. I might have to readjust my leverage and downgrading that number to 2 on 5 if we go there. And I think the market just wants to go there. Let's be straightforward in here. What we have in front of us today, if the candle is about to close like that, and everything suggests that will be the case, because basically you just take your brains, put it away, put it aside. If you are thinking right now, you're just going to get it wrong, because the market will not think. The market will just take every fucking stop loss of people thinking. That pattern is ongoing for quite some time right now. Might be leaving its latest few days to happen that way. I wait for that market to be rational again. Apparently it doesn't want to. So I just let it play its game. I don't want to be among those who made the bearish trades in here, because to me the overall game, the overall trend, the low risk is to find for a reversal in that area instead of just focusing on following those trends. But for now, the market just wants to follow those trends. It's like we don't want to think, we just want to follow and go as far as we can, even if that means creating heavy distortions. So yes, obviously the dollar is strong in the short term. Okay, short-term strong dollar, but the overall trend still remains bearish. So the market is trying to make a breakup. I think it's not going to work. So we'll see how it closes today. If it closes with that breakout, then the next target is in here, which means I'll have to stop and invalidate the trades on the dollar. I mean, we'll go there, and next time we'll try again. We'll be in that area, but of course with much more leverage, because the risk will be even bigger than ever if we had to go there. So just let the market do its fucking job. It wants to show strong dollar and and make Wall Street the safe haven, which I think is the worst case scenario, because it's no safe haven. It's just safe haven on Apple. It's just some strong companies trying to hold the gains, but without making more profits. So they are making less profits, but the valuations are rising. It is a dead end, and it is obviously a bubble that is creating this, and all bubbles will burst. It's just a matter of time. So play the timings. If Wall Street doesn't surrender the gains right now, we're going to let it go, let the market rise again for one final stupid move, and then next time, so next quarter, we're going to go shorting again, trying again to find the tipping point. So that being said, I'm going to leave you guys in here. I'm going to take your questions first. No, absolutely not. I'm here to warn you about the risk. If you want to buy, as I said, and I stand on this, you do whatever you want. Just be aware that if you buy, the risk is enormous, so you shouldn't be putting money in here. Big amount of money. If you want to take tiny short-term speculative trades, go for it. I strongly invite to do it. It's just not the job I'm doing. I'm not making intraday trades, which means short-term trades, I don't give a shit about that. What I care about is the bigger picture. What is the next big move, the next big swing? And to me, it's all the bubble collapsing, and I'll just wait for Apple, the last big one, to fail like others have done. The too big to fail is the most stupid thinking ever made into markets. It always ends the same way. The too big to fail, and the market just fucks up. So it will happen. It's just a matter of time. Not saying it's going to be today. I'm just here to warn you about the risk, because I know how retail traders behave when the risk shows up and they weren't prepared for it. So I'm just making sure you guys are prepared for volatility, because it's going to show up, and the day it will be there, you don't want to be holding bullish entries on Apple and shit like that, because when the shit will come, the worst will be afterwards. So I'm not scaring you out. Really isn't. Just saying that the current timing is great danger. If it plays out bullish, good for the bulls. I'll just give away a few stop losses and wait for the next timing to play. But everybody who's playing in here has to be playing short term. The problem is, when it goes like that, retail traders think that this will go up forever, because you aren't experimented, you haven't traded long enough to be forecasting the problems underlying the price structure, and the thing that those trends won't last. They can't. So it will collapse, and the problem is that you won't see this coming before it's too late. And the time that your problem... So what happens in a bubble? I've already said that. I'm just going to take the Bitcoin's example. It's basically what most of you guys have been doing. For the best of you, you've been buying back then 4Ks and things like that. You've been buying the first breakups. Okay, back then it was already dangerous, but you made some nice gain. But back then you basically put what? $100, $200 in there. You bought few Bitcoins, a few satoshis actually. You weren't able to have to buy yourself a Bitcoin. You put tiny amounts of money because you were testing the market. You don't know what you're doing, so you have the first reaction that every human has. You protect yourself, so you don't put too much money in there. You test the market. Well, fuck it, it works just fine. I basically took a nice gain. So as it is low risk, the risk is increasing. But as beginners, you think the risk is narrowing because you were thinking that thing was risky, and you see that it's easy, or at least you have a feeling that it's easy. So you just repeat the same experience. You kind of forecasting that you understand the market. You see some consolidation break up. Yes, I'm buying again. Damn it, it works again. I'm so strong. I'm hell of a trader. No. The risk is increasing, and you are increasing your own risk as well, which means last time you put it $100, this time you're going to put $400. So you're multiplying your risk by 4, and the market is also rising parabolic as well. So next time 400, great, fucking hell, I made $500 in just a few days. It's kind of great. I'm feeling like I'm good at trading, so I'm going to do it one more time. Consolidation, bullish breakup, fuck it, this time I'm putting 2000s. It took me 1 or 2 years to make those 2000s in savings. I'm gonna risk them all right? Fucking hell, I made 3000s. I'm so good at this. So now I have 10Ks. It's all I have, all I spared. And guess what? Consolidation, buying, 10Ks in. Fuck it. Okay, I'm the best. I'm gonna make 10 to 20Ks and I'm gonna leave out of trading. I'm the best trader ever. You're totally out of context. You're the worst trader ever. You just don't know it yet. Guess who's gonna make money? The one who makes the stupid 10K call in here, who's gonna lose its entire money, because basically 10K in here, you're gonna release this in here and you would have lost it all. And guess who's going to make money? The professional who's been trying to sell in here, took a tiny loss, selling in here, took a huge gain, selling again in here, huge gain, selling again in here, huge gain, selling again in here, huge gain, and try to buy right now. Who the hell do you think has been making money in here? The stupid guy who's been parabolic risk-taking in a parabolic move, or the guy who's been patiently waiting for the crash to come and traded it entirely? Simple question, you know the answer, it's rational. If you think that the dreaming is more rational, then just dream. So buy fucking Apple, just do a stupid trade as most guys have been doing, trading the Bitcoins. Just you don't know where we are right now in terms of Apple. It's a Ponzi scheme, just like the Bitcoin was back then. It's gonna collapse, obviously, and this is what will come next to Apple. The question is, where are we? It's the only question. It's a matter of maturity in trends, in bubbles. In Ponzi scheme, let's call them the way they are. It's Ponzi scheme. So yes, take Apple and brace yourself. That's all I'm saying. Brace your fucking selves. If you want to buy, be ready. I'm selling and I'll take your money. It's obviously what's about to come unless you do it smart. If you do it short term and you're aware of the risk, and you manage your own risk trading at short-term scenarios, do it. I see no problem with that. You and I will trade different time frames, but if you're trading the same time frame as I do, you can be damn sure I have far more odds to take your money than you taking mine. And if you take mine, you're going to take it 1-2 times eventually when I will speculate on some timing and just be proven wrong. It happens. It happens to me all the time. I'm aware of this. And I don't care about that because that's not what I care about. All I care about is taking the money in the end. It will happen sooner or later, and I'll be there anyway. If I fail 1, 2, 3, 4 times getting there is no problem. I'm going to lose 1K each and every time, and I'm going to make 40K when it goes right. So, why do you think I'm overconfident in here? You think I'm crazy? You think I have a bias? Or do you just think, I'm a professional, I've been doing this for 8 years, I might know what I'm doing a little bit more than you guys do. So I'm here to teach you guys how to become better traders, how to understand speculators' behaviors, what happens in my mind when I speculate. It's just, I'm trying to share that with you for free. You don't even fucking pay for this. I mean, some guys will sell you coachings and things like that for 10Ks for the most stupid ones. I'm just sharing this for free, and that has huge value because you're inside the mind of a guy who has 8 years of experience. So I probably have more experience than any of those guys who are listening to me. So you just take what you have to take. Doesn't mean I'll be right or wrong. If you think it that way, once again, you just got it all wrong because it's not what it is about. When we speculate, I'm just focused on being right, and I accept being wrong a few times in between. It's just when I'm wrong, I take generally a tiny loss. When I'm right, I take a huge gain. That's all I fucking care about. So waiting for this to burst, it's just patiently waiting. I think we have a timing. The fact that we broke the monthly lows is a red flag, really a red flag. Yes, everybody think, okay, no problem. We fucked the bears one more time. We just retrace. Okay, I see no problem with that. Anytime we go there, you're out of the game. If we go there, it's terminated. I think we've been there already and should have warned everyone. But all I see right now is instead of being warning, I see even more risk-taking, which leads me to believe we're nearing the end. So I still remain bearish on Apple for the reasons you might be aware of. I'm not trading short term, so we can have short term rebounds. All I care about is that market not breaking the highs. And until we manage to do it, the risk is to go down. And if we go down, you need to be aware that there will be no support. Okay, so when it goes down, if you're thinking buying cheap Apple, and if you're thinking that, for example, retracing to 200, is a very interesting price. It's a pullback yet that you have to buy, because last time you've bought Apple, it worked just fine. If you're thinking that once again the earnings will save you, and that by just buying that dip, obviously the earnings will be bullish, gap up, and the market will rise after this, because it's been happening so many times recently. Be aware of one thing. The worst ever mistake into bubble is to thinking that things will last. And that they will repeat. This is generally when those patterns stop the repetitions that the worst starts to come. The problem is, imagine this. Look at Facebook back then. You remember how brutal this was for those who were buying the highs? Do you remember that? Do you think Apple can do something like that? You really think Apple is so magical that this can happen? This can fucking happen to Apple. Gapping down 16%, and I strongly invite you to believe what people will do if we were gapping 16%. Obviously, the market will keep on selling off, because back then, the rest of the market remained bullish. Facebook was just the first to suffer. Okay, first to suffer in a market that was still bullish, that didn't prevent the sell-off to keep on going. Imagine that. Everything stands about Apple right now. It's the last man standing. If this one falls, the bearish market will play its game and will find no support. So I strongly expect minus 15% gap just to get things started, adding another 15 downward move to go fuck up stop losses below those low, and then eventually we might just stop falling. So if you're buying right now, you'll be stuck. Because when it goes down pretty solid. And you can expect that to be a 10% gap. Meaning right now, the liquidity structure shows some parabolic risk taking. All the danger is red flags, everything we should do. I mean, we've got the red flag in monthly charts, which is more than big time frame. And everybody's just ignoring it. The way I see it, it's bearish. Everybody think it's bullish. Everybody think it's going to go forever. You know what I mean. This thing can collapse tomorrow or the day after tomorrow. I don't know the date for sure. All I know is that we have a timing with high risk of forecasting those prices to go lower. So buy if you want to, but you have to be aware that the risk is increasing each and every day we bought the lows. Might be another low, but this one is really, really risky. All right, bye guys. See you later. But that's basically all I have to say. We're no longer trading technicals. We're trading psychology right now. The thing is just to assess if we have stupid buyers, if we have enough stupid buyers in that market to just start collapsing it, or if we just need to rise another step and climb another stair to bring in some more stupid guys in that market. It's just, if Apple is the last man standing, it's going to be making headlines each and every day, so I'm just waiting for this. If we have to go further away in stupidity, then yes, let's go for it. And in that perspective, I'm not going to remain a seller of Apple. I'm just finding a bubble. So it's like fighting a giant with a tiny sword. So yes, I know it's hard. I know it's dangerous. All I know is that the day I get to fuck the giant, it's going to collapse. And it's no too big to fail. It's nothing like that. But it's a battle, and you want to trade it smart. That's the only way you can trade smart right now is to try some bearish attempts. And if it fails, you accept to get out and wait for the next timing. But the next time, you don't hesitate. Because if you hesitate, the day you're not going to take the trade is probably the day the trade will trigger. So that's simple as that. You just repeat the same strategy, even if that seems to be stubborn. Everybody's saying me I'm stubborn right now. I mean, let's what? We're going to make a bet together today. We're not going to bet anything. It's just we're going to make the count when the thing will terminate, which means when I'll get to make the gain. Then we'll count how many losses, how many speculative losses, how many euros they costed to me, and how much I made with the final gain. We're going to count this up, really for sure, because those who are calling me stubborn right now, I think you just need to learn the lesson that speculating is a job. It's a tough job. And it's not a trend-following job. It's radically different. So you don't talk about something you don't understand. So if you don't get speculation, then either you learn from it or you just step away. But you don't criticize, okay? I'm never ever criticizing the trend traders. I say we are doing different jobs. I understand their job. They generally don't understand mine. So please don't call me stubborn. I'm just making my damn job. I'm doing this for 8 years in every time frames. I mean, I've been high risk speculator in scalping. I've been high risk speculator in short-term trading. I've been high risk speculating in intraday trading. I'm high risk speculating today on swing tradings. It always worked. So why wouldn't it work right here? I think it's just going to work. It's just a matter of time, just like it has always been. When you speculate, timing is the only variable. You will generally be right. It's just you shouldn't risk more than you can to be right. Just that.